How do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome you to today's session. Today's my last session broadcasting on the Alvexo Trading Network. So I'm going to give it my good, good presentation. And I'm going to deviate a little bit from the standard presentation. We usually talk, just please, if I may ask, if you can respond in the question and answer chat area. We have a nice, modest number of people in the room tonight. Just respond whether you can hear my voice and see the opening screen, the chart, and we'll begin straight away. Anybody, just a simple acknowledgement of a hello. Let me know I'm not broadcasting into the ether. Let me just your quiet crowd today. My audio seems to be going on. I'm going to have to rely on my control. But hey, here's Jose that says, all fine, great. Jose's reliable enough. We're going to go with his response and call that a day. I'm back to the one screen Sheen, so I can't really see the questions in real time. I'll pause every now and then to take a look at them. But please do respond. For the newcomers, let me introduce myself. I'm Seth Julian. As of a very short period of time, I will have been the former chief global strategist here at Alvexo Trading. And I'm 65 years old. I've been trading in the capital markets for 52 years now. And tonight's session is dedicated to commodity trading, commodity technical indicators, particularly suited for commodities trading. And so therefore, we're going to take a look. We're taking a look right now at gold. We're in the classic commodities, and I'll show you the list of commodities we have here at the firm. And they're considerable, of course. Natural gas, palladium, gold denominated in dollars, crude, West Texas crude, gold denominated in euros, coffee, Brent oil, Brent cash Brent, cash WTI, silver in dollars, corn, sugar, copper, wheat. Pretty wide selection of the commodities. These are the basic industrial inputs, in the basic raw material inputs into industrial society. And we were asked several weeks ago to put on a presentation specifically about indicators that are germane or specific to the commodities business. The truth is there's only one, and I'm going to go into it. I had a whole presentation set up, as you can see here. This is what I had set up, the commitment of traders reports, but it's frankly too dull, and I think it misses the point. So we're going to just space that out for the moment, and we're gonna just go to the charts. I'll talk about the commitment of traders reports right now, but you'll see as we'll plow through the different graphs. It's an interesting. Well, let me take a step back. What is the commitment of traders reports? Thanks to a data collection service, in essence, of the Commodities Futures Trading Commission, all positions in the market at any given time are listed, obviously not by name, but by type. And they break it into three general categories. The small speculators, which could be considered you and me if we have futures positions in the commodity. And by the way, when you trade CFDs, that you have a derivative futures position, so it's derivative. Yes, it's not the underlying, to be sure, but it is based on the underlying futures contract. And then you have commercials net, and large speculators. Who are the commercials? The commercials are institutions who use the markets as a hedge. So people that are buying gold, for example, in this case, large jewelry manufacturers. If gold is going up, they want to be short. They want to be sellers. They want to be the opposite side of taking these deals, because they have to buy, and so they want to be protected. So they're going to buy. So they're going to go opposite of the market, whereas the large speculators are going to go with the market sometimes. And this is not always true. That's why the indicator is of academic interest only as far as I'm concerned, of course, only insofar as the fact that it's collected at all and presented. Wouldn't it be interesting to see this kind of chart, say, on Tesla or any other, or Union, or Credit Suisse, Union USB, something like that, UBS rather, excuse me. So it's interesting, but once in a while, it will tell us, and we're supposed to be more interested in the large speculators. They're generally referred to as the smart money, not always, by the way. And that's something I want to tell. And this tonight's session was requested by several people who considered themselves beginners in when they characterize themselves. And so I want to make clear that as with many indicators, they're not right all the time. And there's a common perception particularly among beginners, that there's some elusive, magic, secret indicator that the pros and the successful people use that if I only would invest another $1,000 with another schmuck that couldn't really trade, but he's going to sell you what he couldn't do. There is no such thing. It's nonsense. It's idiocy. All technical indicators, bar none, are made up of 4 or 5 data points. Well, I guess this is not. But the Commitment of Traders report is not actually a technical indicator per se, insofar as it's just a record of trades of certain classes of people. That's all. It is a technical indicator, I suppose. People could make, I guess you could make moving averages out of it and whatnot. Probably could apply a stochastic indicator to it. God only knows. But when I'm getting back to the idea of the all technical indicator, the composition of all technical indicators. Let me just pause one thing, make sure everybody's online. Where are the questions? Here we go. Okay, all good. Hi, Wendy. Okay, great. Everything's fine. We're going to roll in along here. All technical indicators are comprised of the 4 basic data points in any given one of these candlesticks. And I can make these candlesticks however the length of time that I want. I call that the resolution, focal length, to use the photographic optic metaphor, whatever it is you choose. Zoom in, zoom out. Again, that's the photographic thing. But this, by the way, just for the record, I'm using the TradingView charts. This is not a paid announcement. These guys are the best operation on the internet. I have a modest paid account, just mostly for this particular indicator, which I'll explain later on. But the free one is just as good as anything I'm putting out here. You can get, maybe not the Commitment of Traders as well, but if that's an arcane thing and most people don't use it. But everything else is freely available, highly flexible, beautiful piece of work. Anyway, the opening price at the beginning of the interval, the high price reached during the interval, the low price reached during the interval, and the close at the interval. All right. So I know that it closed high and not low because of the color. I'll make it a little so you can see. It's the candlestick. See, take out of data. This is where it opened, and this is where it closed. And I know that because it closed higher than it opened due to its coloration green. It went below its open by a tad. It went a tad above its close, but closed pretty high. Right at its top. And those are the 4 basic data points. A 5th data point, where output by a market, will be this area here, the volume. How much volume took place during that move, that day, that interval? And those 5 data points, ladies and gentlemen, open, high, low, close, volume, those 5 data points comprise some or all of the inputs of all of the technical indicators known to mankind. Maybe on Remulac, they have another indicator system I'm not aware of. But in our fair galaxy, this is about it. Combining them gives an indication. Well, let me first separate out. Everybody understands this: open, high, low, close. That's just a movement of the price. This is the amount of trading that took place during that interval, volume. And the color of the volume bar further indicates whether the trades were net long, net buys, or net sells, bids or asks. That's not much of an indicator, but the point is it's elevation. This is the moving average. I forget what the interval of this is, but I can check on this since we're sharing. It's 20. It's a simple 20 moving average. And 20 would be about a month's worth of trading. So it doubles monthly trading, the average monthly trading in that one bar, and it jumps a tremendous amount, right? From 1875 to 1915. That's what is that? A $40 jump in gold. Huge jump. So that means that the sentiment is strong. So you couple this movement, that great length of movement, add it to or multiply it by, to be precise, multiply it by the amount of volume, and you get the Elder's Force Index. It combines the two movements into one. And even there's a moving average that I draw on. Again, I don't remember, but it's easy to find out. It's a nine interval moving average. I don't know why. I don't remember why I chose 9, but it smooths things out a little. 9 would be about a 2-week period, 20 interval period of time. No, it's 9. What's that? 20. It's 9 periods of time. There's no relating it to trade because this is on a daily chart. It could be that's on a daily chart, by the way. It's on an hourly chart. Anyway, no needs to overly detail. The point of the matter is this, and I'm going to. What you've got to train your eye to do. And this I'll get to the nut of the matter right now. And just for those of you who tuned in, hoping to see something, highly up here. Here's the gold chart. This is the MT4 platform, always a reliable and friendly interface pattern. I have a template here called Momentum, where I draw on all the popular momentum indicators. By the way, that volume, I jumped ahead for a moment. Let me just go back and show you the volume, the idea of volume and sentiment. Volume, when combined with price movement, is a strong indicator of what we call sentiment. It means that the emotionality behind the move. A price rise on a declining volume indicates less sentiment. A price rise on rising volumes indicates more sentiment. So you see the jumps here are not that great, whereas here they're mostly up and they are great. Volume. Here the volume is low, it's below average, and the price is not moving so interestingly. Once the volume starts to pick up and the trend is in train, it continues. That's the nature of the herding mentality present in capital markets. Now, as you can see, we got no clues from the speculators here. I mean, take any look here. Yeah, they were moderately net long for this down ride, so they were losing here. They're still they're net long. They're slightly net long. But even when things start to really pick up, their position stays largely the same. They only get hip to it around here. I guess that's a slight indicator, right? But at this point, what do you need them for? You see the thing has been in trend for 3 weeks already. What you need to do And so that's the idea with volume being indicative of sentiment. And sentiment is often referred to, annoyingly, by the commentariat in the economics industry sometimes, as momentum. And that, frankly, is a lifting of the term from physics, which is, I don't know, it's mass times acceleration, I believe. It's a physical term that's reliable. It's a deterministic law of physics, nature. And I don't know, and they sort of like they clone it on to this sentiment business, which but you can tell sentiment sounds like it's from Hallmark. It's sentiment, but that's what we pretend is momentum. Anyway, it's an indicator. It's a probabilistic indicator is what I'm trying to get at. It's not deterministic, okay? Despite all these graphs and charts that look, and now I'm addressing people who are new to the business, who are dazzled by charts and graphs, and you think that there's some secret in this that you don't grasp. Well, let me just bring up the wrong answer indicator. No, there's no secret. There's nothing to it. This is pattern recognition. The movement of price in linguistic, neuropsychotic, whatever, some sort of neuro terms, is pattern recognition. And we as human creatures are innately suited to recognizing patterns. We've evolved to stay in the back of the cave when the shadow of the I don't know, the death snake walked by, the Melongdodon or whatever was, fate. No, we weren't. I'm getting my periods mixed up between the, No. Okay. Anyway, I'm getting carried away. But the point of the matter is, we're able to hide and look through branches and see patterns of things moving, so we can attack, so we can use the advantage of surprise in hunting and what have you, and noticing patterns and even tree life, plant life help us in agriculture. We're pattern recognizers. They say that an infant of average intelligence by the age of 1 has enough neural sensitivity to be pattern recognition neural sensitivity to be able to distinguish between a friend or a foe, friendly face or a dangerous face. I don't know. I don't remember that far back, but I guess these people know what they're talking about. But even so, even if they're half right and it takes 2 years and they're on whatever the case is, you get the idea. So recognizing patterns in a price chart for us is elementary. We have the ability, and that's my point. I want you to learn to recognize the relationship between price movement and the volume that takes place during that movement. And to help you do that, there's a variant of these two indicators called volume on price. What that means is for this data set, which extends back, I guess, to, I don't know, August last year to now, for each one of these time intervals, you have a corresponding volume interval. However, at any given price, I'm being less dramatic. Oh, sorry. For any given price, you don't know how much volume took place here or there. All you know is how much volume took place during this time interval. But if I ask you, well, where's most of the selling taking place between, I don't know, 1700 and 2000? You don't know from this. But you do know from this. This is called volume on price. It's called a price profile, if you will. And what it does is exactly that. It breaks down the data set, and this data set from August till now. You take all the price, all of the activity price-wise. Where was the volume of the taking place at that price? Well, the midpoint is 1678. Is that true? How can that be? Seems illogical. No, I guess, yeah, because it spends a lot of time down below. That's right. That's right. So the midpoint of this chart, no, this is more like it. Here, the midpoint wasn't that much. Oh, I see it. Oh, because must be a second. Yeah, there it is. It goes up. Anyway, you get the idea. The mean price here in this data set is actually quite low. So the price today which is, I don't know, it's, last time I looked, it's 2000. Right? Just before we started it's 1998, 2000. You can see that gold is really on an upswing. There's a lot of volume behind it. And if you couldn't put those two together, this will do it. And if you still are confused, this won't help. This is, let me just check one thing, ladies and gentlemen. Okay. Yes, Barbara, I'm sorry, the reason I took that, but Barbara asked if we were being recorded, and the answer is yes. And for that matter, oh, my mistake. 1 second, ladies and gentlemen. Here we go. There we go. Okay. Sure, no problem, Barbara. Yes, it is being recorded, and you'll all get a link to it within an hour or so. Now, if you here we are. This is getting back. This is a 4-hour chart. I'll give you the daily chart to make it equivalent and make it a little bigger so we can see what's going on. This is where we were looking before. Here is a wide variety of momentum-based indicators. Some are oscillators. Some are I forget the opposite of oscillators. The force index is an oscillator. Anybody remember? Stochastic is a range bound something. I forget what it is. Anyway, look. Let's take a look. Here we are right here, okay? Oh, let me move this away. My view is a little cramped because of the one screen limitation. So you're looking here, you see the price is down, but you start, let me get this to help. But here, you start to notice things are leveling out. Volume is picking up. Even though the price is continuing to fall, volume is picking up right here. That's an indicator. It's a good indicator. The force index is already starting to move up from here. So that's giving you a little advance warning. The stochastic is telling me at this point, it's telling me at this point I'm in oversold territory. So the stochastic is giving me a good warning here. The relative strength index later, not giving me as a good one. The MACD, of course, is way late. And that could be because of I've got it on the 12-26-9 classic ratio. So that's the one I would use too. That's way late. But my point is this. Once you identify the trend, all right, and you do the fundamental analysis, and there may be no convincing fundamental analysis to you, in which point, by the way, I do not enter a trade. I'm a kind of trader that likes to have both sides of my tool bag open. I like to tackle problems. I try to avoid risk. I have an appetite for it, yes, and I know how to manage it for sure. But and by the way, just let me say, in the interest of full disclosure, I lose plenty of money. All right, don't think that I don't lose money, or the experts don't lose money, or there's a surefire way to make money constantly. Where is that sound effect? No, that doesn't happen. No such thing. Nor I caution anybody who's so deluded, who came to our session with the pipe dream of get rich quick fantasies. This is a business like any other business. You have to put your time in. You have to do your homework. You have to understand. At least hope you can gain some sort of understanding. We make a few dollars at it, but well, I lost my train of thought. How's that for brilliance? Anyway, the point of the matter is this: if you can see the trend and you understand it better or worse, more or less, and you see that it's coupled with volume, pretty much all of your oscillators and your let me, you know what, for the sake of thoroughness, I will show you exactly. Here's a great site. Go to Investopedia, and it gives you a great explanation of all of the different great. I'm looking for, actually, I just find the stochastic talks about, this is still the moving average, which I use also. Moving average is very common. I'll show you that in a minute on mine. MACD, relative strength. Where is stochastic? Here it is, stochastic. Um, yeah, it's an oscillator. So I don't know why I was so confused. Anyway, of course it oscillates. Okay, that's no secret. So getting back to the real chart. Once I've understood my trend and I see that it's going up, then you could start to take a look at different technical indicators for slightly more insight. But here, once I see that the price has moved above the 200-day moving average, that's a major indicator for me and many other traders. And let me say something about the idea of being unique versus taking the standard parameters, say on the MACD. There's a lot of parameters. There's the 12, the 26, and the 9. It's a difference between the 12-day moving lag between the 26-day moving average and the 12-day moving average, and then it's multiplied by the 9-day. It's a complicated thing. The point of the matter is this, that you only the technical indicators are useful for seeing different resistance levels and trading levels, and that makes good entry and exit assistance. So if I get into a trade here, I know that it's certainly above the moving average, the 200-day. That's a very strong sign. Although average volume is falling slightly, it stays well above the 200, well above the 20-day and the blue 50 days. They're well above the 3 moving averages. That's a great thing in itself. I see that the large speculators in this particular case are moving up also, but that's hardly surprising. And now I want to show you just one other indicator with respect to gold. And I hasten to let's go back to August of 22. So that's the high there. It's got to be, I don't know what it was, 2026. Can't even see it. It's high. Anyway, I'm sorry. Let me just see if I can do this. No, I don't want to get too fancy with the Fibonacci. Forget that for the moment. But just another business of volume base. By the way, is called market profiling, made famous by a guy named Stedelmeyer, whose book is not in front of me, nor whose title is immediately at hand mentally. But I think it's called Market Profile, Market Profile by a guy named Stedelmeyer. And I just want to show you one other feature of market profiling, which is valuable. When trending, and this is a statistical we've studied, price go up, down when they're in, they tend to close at the high end of the price on the uptrend. They don't close in the middle, they close higher up. Notice in the this is the distribution. Let me see if I can auto look. I'll just drill down a little. That'll give us a little more information. Go to an hourly. Now, what it does is it breaks up the days. Again, all this is, ladies and gentlemen, don't get carried away. It's just a distribution of the price during one day. Here, where's the volume? And we see that the high point of volume on this day is 1964, and the price closed. No, that's the midpoint. Excuse me. This is the high point for this day, and it closed right in the middle. Right. The next day closes in the middle. Next day it's closing. So that means, at least if it's closing in the middle, you know that the sentiment is certainly not weak. I wouldn't say it's robustly strong, but it's certainly not weak. And particularly where you see a lot more trading or a great deal of trading above the mean line. Like here, this is a good indicator that the next day is likely to be up. Well above, volumes very high. Okay, again, all right, is the force indicator any use to you here? I mean, really, what is the force indicator telling you? The force indicator is telling you exactly what these charts are telling you. So volume and price, when you learn to combine them in a unified way, will provide you with Everything that these graphs provide you, nothing more. I promise you, nothing more. And, oh yes, with a great deal of less, a lot less confusion, a lot less confusion. And let me explain just statistically why that might be. Let me just check if there are any questions. This is a good point to pause. Yeah, we can open the floor to questions now, ladies and gentlemen. Excuse me, just one sec, please. All right, forget it. Now, statistically speaking, there's a concept called that limits your ability to be able to predict things. And that, after all, is the essence of statistical study, is the ability to take from the past and look project it into the future. And if you think I'm making that up, there's no greater proof of that than artificial intelligence. Artificial intelligence is merely neural networks at work, just like my brain, your brain. Our brains are neural networks, although slightly more sophisticated than ChatGPT, and will forever be so. I think. Maybe I could be wrong. That's speculation. I freely confess. But all over the place, you read these indicators that say the past is no indicator of the future, and then all these disclaimers, this lawyer compliance disclaimer, save yourself from we're going to save you from yourself kind of warning business. The past is exactly an indicator of the future. It's the best indicator of the future we have. And artificial intelligence is nothing more than basis of pseudo intelligence based on past readings. It can't reason ahead. It can just tell you what it read and spit it back to you in a way that might indicate certain patterns, just like you're looking at on the chart now. But we don't trade here. We trade here. Okay? So when it comes to these indicators, you have to put them together to know what to do right here. Now here I might say, if I go back to, I can say here in the technical, again, is a high point, a support level, and we're getting up to that here on the Bollinger Band. Again, I don't really rely on Bollinger Band. I just throw it into, because this is an indicator orama. This is all I use. Again, force index, volume, on the MT4. MT4 doesn't have the full suite of things that I use, which is just this, volume and price. No, usually, by the way, there's nothing to show in this. If I go to another asset, you'll see no commitment of traders, but there is none. It's this is the iron ore contract. I don't even know where it's traded. It's the Singapore iron ore contract, the Singapore Commodities Exchange. So there's no commitment of traders report. There is no such thing. So let's just take a look at another chart for the sake of thoroughness. Back to that commitment of traders report. This is an hourly chart. The commitment of traders report, by the way, is printed out weekly. So let's go to a weekly chart. That give it at least a fairer shake. Oh, this is way off. The scale's off. Let's fix the scale. There we go. Okay, so we can see that oil prices, that the large speculators are headed down. They're net long. They're still net long, which again is, I don't know, coming into 9 months late. Okay, they've been net long since the price has been falling. So you tell me, is that smart money? I don't think so. I don't think so. So much for that indicator. And I rest my case with the commitment of traders report. But again, price falling, it's broken below the 200. By the way, there's a name for this particular indicator. When price falls below its 200 moving average, in this case, 200 weeks, 200 weeks, that's just 2 years. That's a lot. So therefore, so much the more significant. It's called the death cross. It's not likely to. This is a death gasp. Not going up so much. It's trying, failing. Low. Look at the volume. 20% below the mean. Force index down. You want to see all the other ones? I'll show you all the other ones on. Let me close this for a moment. Make sure there are no more questions. Okay. I'll show you all the other charts with this sort of mania. We were looking at oil before, the WTI, right? Yeah, here's WTI here. I call up the oil. This is my standard chart. This is how I view most. This is my lens to which I always view the world. 3, 20, 50, 200 moving averages, volume, and an average line on the volume, and the force index. Now I'll change templates here to the former one and give you a scary idea of all this. Oh yes, I was referring, by the way, to degrees of freedom. I got distracted. I want to finish that discussion. The more restrictions you place on your trading system, in other words, you say, well, the MACD has to move up, and the RSI has to confirm, and this is called the ATR, the average true range, which is a measure of volatility similar to the Bollinger Band. The stochastic has to indicate this, has to confirm. The force index also has to give me at least a complementary indicator. None of them are allowed to give me any divergent indicators, et cetera, et cetera, et cetera. I guarantee you that the first trade that system allows you to trade, you'll make a killing. You'll make a fortune of money. The only problem is you're likely to die of hunger before the trade ever shows up on your screen. That's because as you continue to add limitations, you say, oh, I'm going to add this, but it has to be like this. At the end of the day, you're looking through a keyhole. And when that woolly mammoth goes through that keyhole, man, you can be damn sure you're going to kill it. No way you can miss. That keyhole is aimed right at its heart. Whammo, it's dead. Think about how ridiculous that is. You're missing all the other woolly mammoths. Not to mention the ones that see you first. They're not going to kill you because you've got your eyes peeled on this nonsense. I shouldn't say nonsense, but too much is nonsense. Less is more in the technical indicator business, ladies and gentlemen. Less is more. Which is more helpful to you, this or this? This or this? I don't know. I mean, I can see a point. If you're sort of a fanatic about this, you'd like all that dizzle dazzle. I feel it weakens my judgment. It's not good for me. It's confusing to me. I feel that this is more my speed. 3 moving averages, volume, and again, this is how I identify trends. By the way, let me just make that little bit of strategy clear to you as well. I have broken down all of the offerings here at the house to a group of, I've broken them down pretty much by these sort of arbitrary: apparel, arms, biotech, etc. I can go to any one of these. Cryptocurrency has its own cat, and I have them broken down. I see the graphs, and here's how I can identify my trends: what's moving, what's not. I can get into it, and there, once I see a trend that looks like it's got something to it, then I can drill down here, and I can look at the news based on it. And this trade, again, I come back to TradingView. This is the Cadillac trading charting platform. So, ladies and gentlemen, with that, I'm going to end my session. I hope that I've covered for you what you were looking for in terms of indicators for trading. Again, let me open the floor to. Oh yes, I do want to ask you to take a little poll right now, if I can impose that on you. Well, you know, I'm going to dispense with this. I don't want to impose anything on anybody. Any questions? I'll answer them now. Oh, the new sound effects. Wow, Wendy, you're really up on things. What a pleasure. What a pleasure. Well, I can always end. I could give you my sign out sound effects. Right? Those are yeah, I feel bells and whistles. You know, it's the spice of life, and cigars. Bells, whistles, and cigars. Anyway, that's my idiotic theory of life. So this is going to do it, ladies and gentlemen. This is the final broadcast on the Alvexo Radio Network. I'll be leaving you for good today. It's been a pleasure. It's been fun. Sibu Sisu, always a pleasure to have you in the room. Jose, thank you. It's a pleasure. All of you, and the new people as well. Thank you for coming. Thank you for participating. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye bye for now. To you too, Sibu Siso. It's been a pleasure. It's always been a pleasure. You're really welcome. Always a welcome guest. Good luck to you, sir, and Godspeed. Bye bye. Goodbye, Jose. Pleasure having you in the room. I always enjoyed your commentary. Thank you.